your calendars out. February 17th, February 18th, live trading, San Diego. We got the Lowe's Coronado. I mean, what else would you want? This event is limited to 50 people. Look at your calendar, clear it, make sure you show up. If you want to be a rebel, this is the place to be. You got to sign up for it now. Giddy up, baby.
Welcome back, folks. I am Jon Najarian, and this is the last 3 at 3 prior to Christmas or celebrations that you might observe. Over here, we do observe Christmas, and we're very happy to say that. But we also understand a lot of you have other holidays, and we certainly tip our hat to you for those holidays and hope that they're all special for you and the get-togethers with your families and so forth. So with that said, here is the December 23rd, 3 at 3, and it will be very short and to the point because I was just on Fox and Fox Business with my friend Charles Payne. All right, unusual activity, large blocks of calls that are bought. We predict upside movement. Large blocks of puts, well, that would be downside movement. And here are those examples. Number one, Roku. These are puts, which means somebody's betting on the downside of Roku. By buying a put, they have the right to sell at that strike price for that period of, for that period of time. Too much eggnog again. So December 30th, which is next Friday, is when these will expire. So 38 puts, that gives you the right to sell at 38 for a stock right now that's trading at 41.27. Who's going to sell the stock at 38 if it's trading over 41? Nobody. But they either A, want insurance, or B, they want the ability on a downward swoosh right after Christmas to take advantage of these puts and perhaps a little panic in Roku. It's 38 puts. We're trading for about 30 cents. So this is a very cheap shot. And if something doesn't happen in the first few days of next week, these puts will be down to probably a dime and I'll be out. On the other hand, if we get a swoosh Monday or Tuesday or Wednesday, actually, we won't trade Monday. That is the 26th. That is the day after Christmas. It will be an observed holiday. So we have 4 days to trade next week, not 5. Bang. Second trade on the screen, Disney. This is a call trade. Finally, people are betting that maybe we get a pop in Disney around the January expiration. So third Friday in January, the Disney calls they were buying were an in-the-money call. They were worth $1.24. How do you know that, John? Do you have a magic formula? No. They are in the money by $1.24. The right to buy it at 86 when it's trading at 87.24 is 124. The rest of that is extrinsic premium. And there's a much more complicated explanation that goes into figuring out why they trade for more than the in the money amount. But I think you know that since their time into the future is just about 4 weeks, that has to be built in there, as well as volatility, as well as the hedging that somebody would have to do that sold those calls. They would need to buy stock and buy put. So all of those factor into it. Like I say, somewhat complicated. What's not complicated is somebody bought 5,900, which is nearly 600,000 shares of stock equivalent. And they did it at the 86 strike, paid about $4 and call it 20 cents for those. Bang. That gives them the right between now and that third Friday in January 20th, to exercise that right and take stock from somebody at 86, no matter how high it goes. If it zooms back to 90 or something like that, or 92, they still have the right to buy it at 86. Bang! That's trade number 2. The third and final trade today is puts again, and it is the January 20 puts. These give you the right to sell at $20 from now until that third Friday in January, just like the trade above it. But the stock was trading $20.64 when they did it. So this is an out of the money put. The Disney trade was an in-the-money call. This is an out-of-the-money put. They have no intrinsic value. All of it is based on hedging and volatility and time decay. So these puts were trading for $1.17. If you chose to buy them for Bumble, BMBL, you would then have the right to sell Bumble shares at 20, regardless of how low Bumble goes. So those are our three trades. Number one, Roku, and it was negative. It's puts. Number two, Disney, and it was positive. It was buying calls, positive. And the third was Bumble puts, and that was a selling at the 20 strike in January. Well, that's going to do it for us today, folks. Like I said, short and sweet. You can check out Market Rebellion Live, our next live event in San Diego. That will be marketrebellion.com/SD. That's marketrebellion.com/SD. Thank you for joining me, folks. Have a great day, and I'll see you soon right back here on Market Rebellion Television. Remember, you can get most of this streamed on Spotify, Twitter, YouTube, as well as Market Rebellion. We encourage you to sign up for our YouTube channel. The handle there is you go to YouTube, you search for Market Rebellion, click subscribe. It's free. You get over 3,000 videos for free at our YouTube site on Market Rebellion. Bang! Have a very great holiday. Safe and happy one. See you next week.